we've talked a little bit about this topic. I didn't quite know that you were pretty deeply involved in the whole blockchain crypto world until we talked most recently. So, how do you think blockchain is going to impact real estate, or especially over the next 10 years?
Well, I like to say it's going to change everything. And I think it's going to change the way real estate's being done. I think that we're going to see a shift in transaction times, the way it's transacted, the way it's financed. One of your earlier guests, he didn't think that it was going to affect title companies. I think it's going to disrupt title companies. I think just the whole face of the real estate landscape is going to change. Whether you're buying a house, investing in real estate, whatever it is, whether you're pulling money, no matter what you're going to do in real estate, I just think it's going to change because the ability to fractionalize and to tokenize and to transact instantly and to be able to scan a QR code on your phone and transact something, to go to an exchange or a swap and be able to swap something out instantly. I think that changes the whole game. I mean, your last guest talked about cap rate compression. Your cap rates are going to, change drastically because, not just the premium of moving from private to public, but also like you're going to look for value. You're getting 0.1% in the bank. You're getting 1%, 1.5% on a 10-year treasury. But you can instantly go transact in something and you're going to be able to get, 2, 3, 4, 5% on it. And someone says, hey, I need to hold my money somewhere for 8 months, but then I need my money back in 8 months. Well, you can go to an exchange and you can make that, that trade and hold it for 8 months and then get your money back. So it's going to change. Yeah, it's going to change, the way estates are planned. I know I'm just kind of going here, but the way estates are planned, you got to think about states now. Someone passes away, you probate, you do all these other things. It can take 6, 9 months. But if someone's invested in a partnership, they don't have to disrupt the partnership to get their fractional ownership out of that partnership. That can be transacted instantly. Like everything changes. It's going to change everything.
I agree. On the fractionalizations, you talked about basically you're globalizing a local asset by the secondary market. I mean, there's still going to be SEC requirements, depending on how these things are structured. But once that timeline, take a 506c for an example, you have to be an accredited investor to participate. But after 12 months, in the U.S. But after 12 months, that security can be sold, and don't take any of this as legal advice. But
right.
But at that point, when you have a liquid secondary market like blockchain can offer, and platforms as they're developed can offer, now you have a global pool of investors, as opposed to right now, you kind of have to know someone. Unless you're going on some of these like what is it, Realty Mogul and some of the crowdfunding platforms. Basically, you have to know someone, but now you don't.
Right.
And you can participate in the Sears Tower in New York and buy your 0.005% of it. But New York City has a huge boom over a 10-year period. And, hey, you get the cash flow along that time period. You decide to sell it in 18 months. Take your equity, go out and do whatever you want with it. Do you think as that evolves, it creates a risk in the near term of a potential bubble? And not to get you to speculate, but that maybe investors should watch out for that?
Yeah, I mean, that's with anything. I mean, you're seeing it with some of the coins, you're seeing it with NFTs, and I think it's going to depend on how fast we adopt the currencies, right, or the tokens. If we get a slow adoption of tokens and there's not a mass influx of money, you won't see that happen. But if everyone catches it and it gets a lot of publicity, and there's a lot of people that are rushing to the space, and there's not a lot of product that's available, a lot of product that hasn't been tokenized, then I think you could see bubbles form. We already know there's going to be some cap rate compression. You could see mass fluctuations in that. The one good thing that you have when it's with real estate versus with other assets is if you're buying into a cash flowing asset, that cash flowing asset's still going to be there. A lot of this other stuff, it's kind of like
Dogecoin doesn't have intrinsic value.
it's
the 300
the
unit
network.
apartment complex, like people still live there and they're paying rent.
Yeah. Well, even think about publicly traded companies. You go into the stock exchange and you can go buy a publicly traded company. Well, how many booms and busts have we seen in the stock market where, what was it? WorldCom was $100 and something billion bankruptcy, and Enron and all these other companies. You can have a bad operator on some real estate, but also usually built into those partnerships is, what do we do when there's a bad operator? Can we remove that operator? The building's still there. There's cash flows still there. Something happens to the building, storm, fire, something like that. We got insurance. That's the thing about real estate is we can even out, smooth out a lot of those rough spots that you might see in the other market. And when's the last time an apartment complex spiked 400% in value overnight and then dropped, 50% the next day? Doesn't really happen. I mean, there's a couple houses down the street that probably sold for 100 grand more than I thought they should have, but that was short lived in a boom, So I think like I said, if you have a limited amount of product and you get a lot of hype in the space early on, I think you could get a lot of money rushing in, but that's going to depend on the structure of the deal too. Because if you don't have if you don't have it set up to receive overseas money, if you don't have a Reg A, Reg A Plus, Reg CF, some of those things, you may be limited. Some of the governing documents from the transaction could limit, the buy-in size. So you probably have a few things that could help, prevent those fluctuations. But at the same time, look at the NFTs. Most of the people buying them, if you're paying $1 million for something, you got the money. So you're going to qualify for all those things if you're a wealthy investor. So we'll see how that shakes out.
Yeah, in some sense, it's kind of like the Wild West, but you're still dealing with SEC, and there'll be further regulatory action taken on to protect the consumer. So that's a good thing too.